Good afternoon, it's Pat Walker, Mission Winners, doing a video overview of the ETFs. And you can say, well, why do we do this? It helps us find winners. Leading groups produce leading stocks produce leading groups. So why don't we look at the strong ETFs, which helps us, and also avoid the weak ETFs. That's important too, right? So here we go. Biotechnology, this is the 200-day. It's still lagging. Okay, it's a little rough here. Be careful with that. Cloud computing lagging below the 200-day. Some selling there, not a lot of power. Electric vehicles has dropped, not much power there. Be careful with that. Dow Jones Internet lagging. Be careful with a lot of Internet. IBD 50 dropping. Look at this. That's not good. That's not good right there. Okay, tells you. And by the way, that's not knocking the IBD 50. It just says there's not a lot of quality there. That's all at this point in time in the market. Function of the market. Gdx Gold Miners picking up. See these tops across here? You have a cup and a handle with a volume pickup. What does this tell you? A, maybe this ETF would be a good buy if it breaks through the pivot. What else? Gold miners. Look at some leading gold mining stocks. There we go. That's connecting the dots, and I love it. Gold picking up a little bit, but not as strong as the gold miners. Compare and contrast. Here's the gold miners. Here's the gold. You see a base right here, though. What do you notice also? When you do a little bit closer analysis, you can say it's slowly rising up on steadily increasing volume. There's potential for that. Something to watch. Continue onward. Biotechnology, another biotech ETF. Leave it alone. Online retail, dead. Forget it. I mean, it's that simple, folks. We don't have to overthink this, okay? North American technology is lagging. See this? What does that say? Be careful with tech. It's not that hard. Medicine, hanging in okay, but it still needs to get some power through the, right here, you see this? It needs to get some power through the 200-day, which is the purple line. Mid-cap, what do you see here? It tells me real quick, be careful with mid-cap stocks. That's it. Don't overthink it. You don't have to. Makes it easier for construction. Look at home construction. This was a leader for a while, but look at how things changed. Okay? So what's that tell us? Beware home building stocks at this point in time. Growth index, growth in the S&P 500, below the 200-day, folks. Needs to start showing some power. It ain't there yet. Airlines lagging. This was strong at one time, but now it's lagging. It's below the falling 200-day. Be careful with that. All right? Regional banking, lagging. Also, I'm going to pause here and share something. Please do not think, oh, Pat Walker's negative. Oh, no. There's a good quote. I never met a wealthy pessimist. All right? I'm always looking. I'm optimistic. There's opportunities, and it's our job to find them. It's that simple. Now, at times, one of the best things we could do is after doing all this research and say, cash ain't a bad place either. Okay? Just waiting. Be selective here. The markets are a little sloppy, and the action's telling us that. Let's continue onwards. Mid-cap. What does this tell you? In 1 second, it says stay away from the mid-cap stocks. Oil services. In 1 second, what does this tell you? Maybe I should look at some oil stocks. And we're involved with some oil stocks. It's telling us to. There you go. That's simple. Online retail, they ain't buying. Infrastructure. It's not so sturdy right here. There's just not much stuff going on there, folks. Okay? Be careful with that. Pharmaceuticals. Now look at this. Picking up. And it has been strong. Way back here. Here's the tactic I want to share with everybody. Way back here when it was looking good, starting to pick up through here, you'd say, hey, I see some tops going through here, maybe to lift. Look at PPH and see what are their top 10 holdings. That's what you do. And it works. Systematize. Systematize. Let's continue onwards. Oops, I'm sorry. PPH. Here we go. Cloud computing was strong a long time ago. It's dead. Leave it alone. Steel, hanging in there. You see steel's hanging in? Good. You can look at some steel stocks. Yeah, we've been involved in the metals, okay? Semiconductors, what does this tell you? SMH, stay away from the semis. Done. Don't overthink, like, oh, maybe it's going to bounce here. Why play the maybe game? Focus on the strength. Solar, nothing's happening here. It's below the falling 200-day, all right? And it's dropping again. Stay away from solar. Small cap, another small cap ETF. Stay away from small cap. Done. Uranium picking up a little bit. Metals, right? Let me see. What else did we see that was acting decent? What other metal was acting okay or related to that? Oh yeah, that's not too bad. And oh yeah, that's not too bad. That's how you connect the dots. Uranium, you could click on URA and find out their top 10 holdings and see if there's anything good there. There you go. See what happens. Here's a little lesson for everybody though. I want to help you here. It gapped up. See that gap up right there? It gapped up and it closed off its highs. This needs to take out Friday's highs and it needs to do it on volume. There you go. I hope that helps you. Oil, nothing. Just going sideways. But what's the plus with it? It's above the rising 50-day. There you go. Something to consider. Aerospace and defense was lifting off. That's a bad pun, I know. And it's getting a little choppier here, but it's still above the 200-day. So it's not that bad. And above the 50-day, above the rising 50-day. There you go. Biotechnology. Another biotech ETF. What's it tell you? What has it been saying for a long time? Look at this. I mean, look at this, folks. I'm going back here. Right here. First off, it lost the 200 here, rallies up to the 200, falls, rallies up to the falling 200, and falls. It's been saying a long time, stay away from me. That's simple. Home builders. Another home building related ETF. Nothing. Materials. It's hanging in here. Maybe it's going to form a cup with a handle right here. All right? And I'll draw it for you. Like that. That's it. Please know this. This is a misnomer. Everybody thinks, a cup and a handle, it has to have flat tops. It's just got to be going flat. No, it doesn't. You could have a slightly downward sloping trend line, and it's still relevant. Now, let's do a little bit more analysis for you. All right? This is what we do at Mission Winners. You say, well, I see that. That doesn't look too bad. Green bars and red bars. Tell me about this bar right here. Look at this. It gapped down. See the open? It gapped down and closed about its midpoint, but did it on a pickup in volume. What does that tell you? There's a seller there. Be careful with that. There's sellers up there. Don't argue with them. That's simple. Till it starts to really push above that white line with volume, leave it alone. Energy. Oh, gee whiz, another energy ETF. Gosh, I think that's one or two that we've seen that are acting decent. Tells you to be looking at energy. Good. Financials, dead. Nothing. And by the way, I'm not trying to go too fast. I'm just going to be brutally blunt. There's nothing there. Don't overthink it. Leave it alone. Look at all the red selling. Nothing there. Below the 200-day. Below the falling 50-day. Forget it. Financials, gone. But there will be a day it comes back. I will guarantee it. When? I don't know. It might be later this spring. It might be this summer. It might not be till next year. I don't know. But by scanning the charts, we'll be ready for it. That's simple. Industrial's lagging, nothing there. Technology is having a little bit of a rough time. Below the 200-day, needs to strengthen. Consumer staples. Look at this. What does this tell us? Isn't this an interesting? The market's kind of sloppy, and this is going up. Staples, necessities. You got to have toothpaste. You got to have toilet paper, right? You got to have deodorant. Staples. That's what that is. And by the way, is that not defensive? Yeah. And is it an indicative? Think about this. The market's been a little sloppy, but you got to have deodorant. At least I hope you use it. Just kidding. All right. Let's move on. Utilities. What are utilities? Let me think here. Consumer staples. Yeah, stuff they have to have. That's kind of defensive, Pat. Yeah. Utilities. Oh, yeah. Look at that moving up. Yeah. Kind of defensive, isn't it? Think about that. Isn't that intriguing? Look at the base right here. And look at the steadily rising volume. Just things to look at. I'm not saying buy it now here. Healthcare, kind of defensive. Hanging in there good. We're involved with this, okay? We own this ETF too, and we've added. All right? By the way, look at that bar right there. Look at the volume. I want to show you a great lesson here. So, well, it's going sideways. I guess it's kind of a cup and a handle if it takes out that top. That'd be pretty good, wouldn't it? Oh, gee whiz, it did it on volume. They voted. There you go. That's simple. Done. Own. Let's see what happens. Consumer discretionary. Remember, consumer staples is strong. Discretionary. Things that the consumer doesn't have to have. It's lagging a little bit. Be careful with that. Metals and mining. Hanging in nice. Good to remember. Oil. Another oil ETF hanging in there. Notice the energy theme? We've seen it several times. There we go. Retail. Think about the consumer. Consumer necessities versus discretionary. Retail, lagging and has been lagging. Tells us the consumer's being a little cautious. That's simple. Software, no power there either. You see this and you say, I don't think I'm going to look at a lot of software stocks. So let's go in and take a look at the MAXLIST stocks. Here we go. There's Apple. Apple's lifted up, pulled back, maybe going to find support here on the 50-day. We'll have to watch this and see what happens. Here's the weekly chart. I'm going to refresh this to make sure this is right. I always do that when I do analysis. A little loose here, folks. A little bit of loose action here. Needs to maybe a cup with a handle right here, but it's very aggressive. And there is some accumulation and some distribution. Not the best setup. Go to the daily and you say, would I see this chart pattern in any book saying this is what you look for? No. So be cautious with it. There you go. Be cautious. Amazon. This is what I wanted to point out. This is a higher low setup. You see this low spot here? This is one thing that we've done for years in Mission Winners. This is one thing we were doing long before we had Mission Winners. Higher low setup. This low is higher than this low. It's a MAXLIST stock. It takes off, it triggers. It triggers here, buys here. Okay, several buys in here and a run. From here, we'll just call it 29.70. 29.70 up to 3,400. I'm going to sell it at the top. That's a lie. But you know what? That's good money. There you go. That's it. The higher low setup, something to remember. There's my gift for you. Biotech. Alibaba rallies up to the falling 50-day and it starts to fall off again. Nothing's good there. Be careful with it at this point in time. Okay? Needs to show some power. BIDU still living below the 50-day and the 200-day. You're not going to see this in chart book saying, this is what you look for. This is what you want. No. Move on. Meta, Facebook. This was great. And then, the wheels fell off. There's not a lot here. Maybe it's a low-level cup with handle, but you got a ton of overhead supply, folks. Be careful with that. Google had good buys here and here and a good lift. Sells into strength, and yes, it was a higher low setup. This low was higher than this low, and it lifted off. And see the volume pickup on that bar? See the gap up? There we go, buys. Then it hit this little shelf right here that it lifted through. See the volume pickup going through that shelf right there? There's the volume pickup. Buys there and there, runs up, peaks here, sells some, starts to drop, lifts back up on, okay volume, starts to drop. We lock in the gains, and it's gone. By the way, in this entire move, no 5-minute charts, no 10-minute charts. Hourly charts, daily charts. Done. Goldman Sachs, another one below the 200-day. Leave it alone. It's below a falling 200-day. When we start making our minds up and say, I ain't going to mess with stuff like that, you'll be light years ahead of other people. MasterCard was living below the 200-day, lifted up on it. See that volume spike? That was good. Now it's going sideways below the 200-day, but there was some power there. There was some power here, all right? Maybe this is going to form a low-level cup with handle. By the way, there was a very important word I said there, maybe. Let it tell you what to do with price and volume. That'll help you. Something to watch. Microsoft is forming a big cup and a handle right here. Here's the cup. Here's the handle. Is it going to continue forming the handle? I don't know, but every handle has to start someplace. One slight negative, it has fell on fairly heavy volume on Thursday, and right there. Some selling pressure. Till it starts showing some life, be careful with it. That's simple. Netflix, they ain't even renting that stock. There's nothing here. Leave it alone. NVDA, I have to point this out also. This is the higher low setup. This low is higher than this low. We teach this all the time. This is not fancy. This is just simply saying there is more power, okay, here than here. You could say, Patrick, how can you say that? Because this low is higher than this low. That's how. Everybody sees it. Starts to lift up. You see the volume pick up on this bar? I'll do something for you to help you. There we go. I marked this and said, hey, if this starts to lift up, this is on the key list, starts to lift off with volume, we could buy some. Oh, gee whiz. I guess other people saw what we saw. Gaps up and starts to lift, and we buy some. Oh, look, it gaps up and it starts to go more, and we buy more. Look at the volume pickup. And what did it do? Oh, that's not bad. Oh, that's pretty good. There you go. That's it. Buys, rally up, sells into strength, starts to fall, sell the rest, and we're gone. And that is a good move. There you go. Let's continue onwards. By the way, please know this. They all don't do that, okay? I don't ever want to convey that idea that, oh, everything's just beautiful. No, you always manage them. But it's nice when they do work, and thankful for that. It was a good return. Tesla, what is this? I want you to look at this. What do you see? Pat, this low is higher than this low. Oh, yeah, wow, maybe that's a turn. Maybe that's showing some strength. Oh, wow, look at this. This low was higher than this low. There you go. Takes out the highs of the previous bar. Buy, buy, buy. Look at the volume coming into that beast. Is that huge? I tell you what, I hope Elon Musk hears this because I think he should make a truck and he should name it the Beast. How about that? The Beast. There you go. And what color would it be? Sweet potato pie orange. There we go. Sweet potato pie orange. There we go. Anyway, that was a good run for us, folks. Right there. Lifted up there. Buys here. You know, you call average price $8.15, $8.20, up to $11.30. There you go. That's where it's at. Still in, by the way, people own it down here. They've sold into strength, but they still own some. That's it. Twitter. Twitter lifted up on news related to Elon Musk. Lifted up. See this? It gapped. This stock was dead, by the way. Dead until that news. All right? And lifted up. And what's the plus here? Here's the analysis for you. You go, boy, that baby gapped up on some real volume. Yes, it did. A little bit of selling on that bar there, okay? Why do I say that? Gaps up and closed near the lows on a pickup in volume. And then it steadily falls. What's the plus in the chart action here? Price and volume. Lifted up on heavy volume, and it's pulling back on what? Steadily decreasing volume. Maybe the sellers will dry up, and it will turn and start to lift again. Most important word I said there was maybe. I don't know the future. Nobody knows the future. But by studying a lot of charts through the years, you start to see the patterns. And again, up on heavy volume, down on decreasing volume. The sellers are starting to dry up. Starts to lift. If there's volume there, there's potential. There you go. And check out Visa. Look at that, right up to those tops. Maybe it'll lift, but it needs to get up above those tops. It's below the 200-day right now. By the way, we mentioned it earlier. There's Visa. What's Visa's sister stock? MasterCard. See that pattern? See those tops? Here's Visa. Check it out. I'm not saying it's going to break out, but they bear watching. I mean, it's going to take some work here now because it's fallen on some selling volume. You get my point. Over and over. Money, big money can flow into these stocks at the right time. And it's our job to find that right time.
Thank you for watching the video. We hope you enjoyed it. If you did, please hit like. Maybe hit that subscribe button. We come up with new content nearly every day. Also, check out the videos on the right. YouTube recommends the one on the top, and the bottom one is something we thought you might enjoy. See you next time.